And for more on this, let's bring in Boom Bust co-host Christy I and Michelle Schneider. She's the managing director of the Market Gauge Group and author of the best-selling book, Plant Your Money Tree, a guide to growing your wealth. Thank you both for being here. Christy, I want to start with you. You know, Powell's faced questions from lawmakers after the Fed recently kind of changed its tune on inflation and a rate hike. What have we learned, and can you break all this down for us today?
Well, most of these remarks were actually prepared remarks that were largely in line with all of the comments made previously in the June 16th press conference. But after a roller coaster ride across basically all asset classes in the last few days post-FOMC, traders were paying very close attention here. So it appears that Powell is kind of doubling down on his very dovish narrative to offset his last message. The only bit of surprise came after the last meeting, which was that a big taper tantrum did not materialize. So that was a little bit of a surprise, because when the Fed officials started talking about pulling back on central bank easy money policies back in 2013, investors balked and yields on treasuries rose while volatility in stocks jumped. So fears of another taper tantrum has preoccupied the Fed for months and played a big role in delaying their plans. But now the opposite is happening. The Fed has signaled that it has begun discussions of reducing bond purchase programs launched during the COVID-19 pandemic, and investors are pretty placid. Stock volatility is diminished, and essentially the market is just taking everything in stride for the most part. So yes, the market did have a couple dumps, but volatility is nowhere near the highs at all.
And Michelle, how are markets pricing everything in here? Because we had the worst week since October after the Fed meeting last week, and now we're back near all-time highs. What's going on in your opinion?
Well, we're near all-time highs in some things, but a lot of things are not. So we're having an interesting rotation heavy back into growth in tech stocks, and that's why NASDAQ is at all-time highs. Why, if you look at the Russell 2000, they've rallied as a result of the market correction being over and more dovish talk out of the Fed, but they're not nearly as robust as what we're seeing with tech and growth. So essentially, we're really in a situation now where this is great, and you can look at the price of things like the TLTs, which show that the yields are softer, the junk bonds, which show that the bond buying program by the Fed is still robust. But we still need to see these other inside sectors at least hang in there, if not play more catch up, for this to be, let's say, a new leg up. If that happens, great. Otherwise, this rotation to growth is healthy, but it also reflects the optimism that the Fed is going to keep those yields down and more focus on the job market and this coming up GDP than they are, let's say, on inflation, which right now they've knocked the wind out of a lot of these commodities.
And Christy, you know, it's been kind of a wild day for Bitcoin as it's struggling to stay up after China's crackdown. It actually fell below $30,000 before actually coming back. Is the crypto rally over, or are we ready for another one?
The rally is definitely not over, as we broke it down yesterday. It's just a temporary blip as miners relocate and sell out of their Bitcoins to pay for relocation. So photos have now even surfaced of Chinese logistics firm airlifting 3 metric tons of Bitcoin mining machines to Maryland as the Chinese government cracks down on the industry. So in a way, this could actually be a good thing for Bitcoin, because miners are starting to believe that this is, quote, fantastic news as they compare China's stance against Bitcoin with the country's ban on Facebook and Google. Both were wildly successful companies after they got kicked out of China. So basically, getting banned in China is now kind of like a rite of passage for free technology that stressed that the crackdown meant that Bitcoin is working, not failing, because it's putting fear in nations about the loss of capital. So now nations actually have to pick sides, which is incredibly bullish for Bitcoin in the long and medium term. But all in all, nothing has really fundamentally changed in China's government position on Bitcoin since its controversial trading ban back in 2017. Half of Bitcoin's network has now been shut down in China, and Bitcoin's hash levels is that of the mid-2020s. So a lot of flows of headlines proclaiming that China's cracking down on crypto for literally the nth time is continuing to put a lot of FUD out there in the market. But that isn't real new news at all. There's still a lot more room for Bitcoin to run, and this is kind of an opportunity for Bitcoin, given the massive punitive measures from both banks and governments. Mining will now shift, and networks will actually flourish as a result of making use of friendlier, more reliable jurisdictions.
And Michelle, institutional selling of crypto reaches its longest streak since February of 2018, and Grayscale's giant Bitcoin unlocking day draws near. How is this impacting the crypto space?
Well, if you look at the institutional outflow, it's really only 90 million Bitcoin. And if you look at the market cap of Bitcoin at 600 billion, it's relatively small. And the same thing with the shares of GBTC that are coming on the market to the tune of 600 million on July 19th. It could cause some short-term volatility, but that also is very small compared to the underlying. So I'm really very happy to hear what Christy said, because the mining, it's true. The Pennsylvania company, for example, went in and is trying to figure out how to take waste from coal to mine electricity for Bitcoin. So this will bring more innovation. And I think those institutional buyers have not necessarily been a huge impact. I think the China news was the bigger impact, considering right now 65% of all mining happens in China.
And Christy, I got about 45 seconds, so I'm going to give you the final word here on this.
Well, as you said, right now the Bitcoin, there's so much more room to run. ETH 2.0 is basically coming on later on this year. So that's going to be not only a huge boost to the entire ETH and DeFi ecosystem, but it's also probably going to be a boost into Bitcoin, because essentially Bitcoin is the gateway into all of the other cryptocurrencies. So I know we focus a lot mainly on Bitcoin and ETH, but I think the focus on for the latter half of the year is definitely going to be DeFi.
And we'll do more of that here on Boom Bust. Boom Bust co-host Christy and Michelle Schneider of the Market Gauge Group. Thank you so much for your insight.
Thank you.
Thank you, Brett.